If you've been watching mortgage rates lately and wondering why they keep bouncing all over the place, you're definitely not alone. Over the past few weeks, rates have started climbing again after briefly improving earlier this year. According to the Wall Street Journal, most 30-year fixed mortgage rates are sitting somewhere in the mid 6% range, with the national average sitting at 6.63%. Mortgage rates today are being driven more by Wall Street, inflation, and global events than by what's actually happening in the Denver housing market itself. The real driver is the bond market, especially something called the 10-year Treasury yield. According to the Federal Reserve, Treasury yields have risen sharply in May, and when Treasury yields rise, mortgage rates usually rise right along with them. This week has been extremely headline driven. Rates actually spiked towards 6.75 earlier in the week before improving slightly after reports that negotiations with Iran might be progressing. Oil prices have been extremely sensitive, as you know, because of the conflict involving Iran and widespread concerns about the Middle East. And obviously, anytime oil prices rise, investors worry that inflation could heat back up again. It's basically this trend that we're seeing. Good geopolitical news, oil prices fall, treasury yields fall, mortgage rates improve. Bad geopolitical news or inflationary news, rates jump up. Most analysts believe that if global tensions improve, we could see improvements, but that's kind of a big if. So what does this mean for buyers here in Colorado? We're seeing buyers become much more payment sensitive again. Monthly affordability matters more than ever. Homes that are priced correctly are still showing and are still selling, but homes that are overpriced or that need work are sitting for a lot longer. We're also seeing more sellers offering concessions and rate buy downs to help buyers manage higher monthly payments. And this is a really good strategy for today's market. At the same time, inventory across Denver Metro and the Front Range has continued to improve compared to the crazy low inventory that we saw several years ago. So in many ways, our market is hanging in there. So here's the big question that everyone's asking. Are rates coming down? Well, I don't know. I don't think anybody knows. But for now, buyers should focus less on timing the perfect rate and more on finding the right home and the monthly payment strategy. Because the truth is, rates can always be refinanced later. But that right home in the right location, it may not always be available. And honestly, today's market is creating some really cool opportunities that we haven't seen in many years for buyers who are prepared and ready to go. If you're thinking about moving to Colorado, buying your first home, or just trying to understand what's happening in the market, follow along because we break this stuff down every week in simple, real world terms.